Bitcoin breaking above 60,000 here. There you're taking a look at BTC-USD. The cryptocurrency has been on a tear this week, now standing in striking distance of its all-time high. Of course, we still got a little work to do to get there. 68,000 is the marker. Yahoo Finance's Josh Schafer joins us on set to talk about the implications of the rally. Hey, Josh.
Rob, we've been talking FOMO rally for a while now, right? And people just sort of looking for places to potentially earn money and maybe earn money quick. And that has sort of always been part of Bitcoin's story, right? And I think we're kind of seeing that right now when we see Bitcoin at its highest level since 2021, since we really had that face ripper of a rally where Bitcoin reached almost 70,000 back in that pure euphoria. It's interesting to see Bitcoin enter the rally at this moment, I think, right? We've seen the AI plays surge over the last couple of weeks. We've seen NVIDIA surge on what most people would argue is a real fundamental story. And then some other AI names that sort of surround NVIDIA, or I'll call out maybe SoundHound here over the last couple of days, catching a massive bid, right? And a lot of volatility in that stock, been interesting to watch. You had two companies yesterday essentially mention that they might someday benefit from GLP-1s, which again, I think is a real fundamental story. But the moves we saw in Viking Therapeutics and the other therapeutics company that took a big move, most people would probably argue are a little bit beyond where maybe the fundamental story is there. Take a look at that two-day gain of over 120%. So I'm not shocked, right? Of course, Bitcoin is getting in on this fun and people are just maybe trying to, I don't know, go risk on.
Yeah, they certainly are, especially in some of those plays that you just highlighted there. But Josh, I think the question that so many investors are asking here at home, and one that the three of us have talked about time and time again, is just in terms of that bubble-like comparison that we have heard numerous times on the street. Even some strategists who have come on the show now saying that some of the levels that we're seeing, especially in certain stocks, is bubble-like territory. But what does that mean, though, to the broader market, and whether or not this rally, or the thought process behind whether or not this rally can be sustained?
It's been interesting because you hear different things from different strategists, right? There's sort of the advice of maybe it is bubble-like, and that sort of means that you can't afford to not be in it, or at least be in some of the bigger names. And a lot of people have said that with a stock like NVIDIA, right? Or some of the Mag 7 stocks where it's maybe they're getting closer to bubble territory, but the earnings story is also there, and the earnings projections, as we talked about yesterday, are there for some of those stories. It is when we talk about something like Bitcoin, or we talk about something like the smaller AI plays, I feel like fewer and fewer people that we have on the show are making a real fundamental base case to potentially support that. And one thing, Sean, on valuations too, that stuck out to me, we were highlighting this yesterday on the show, there was a great chart from Capital Economics talking about valuations we see right now in tech and valuations we see outside of tech. Interesting when we think bubble, how not stretched we are from a valuation standpoint. If we're talking about strictly forward price to earnings ratio here, which could mean it's the early days of the bubble, right? Remember, we first started talking about the bubble in, say, 1996. The bubble didn't burst for several more years, right? So as you said, that leaves us with the key question of what does that really mean? Yeah. If I had that answer.
Everyone's trying to figure it out.
If we all had that answer, we might not be here.
Right, but I also think it goes back to what you were saying, just in terms of the fundamentals of so many of those key companies. When you take into account NVIDIA and what we've seen from so many of those very large and strong tech companies, it's extremely different what we're seeing today versus what we saw back in 2000 and 2001. So those comparisons, and Citi's going to join us, a strategist from Citi is going to join us later on in the hour, talk a little bit more about that and why they actually are one of the strategists out on the street who don't see or don't think that comparison really makes sense at this point.